Hi class, just a quick overview of round four. It looks like everybody was just about everybody's able to increase their net profits, and that's a good thing. However, points looks like we're on a declining scale of points here, and we can see that some teams struggled in the fourth year to achieve the points that they're hoping for. Now, everybody was able to increase their stock price. Everybody was able to increase sales, which you would expect in an industry growing in double-digit percentages. And earnings per share also increased pretty nicely. Stern Autos is in, looks like they're in first place pretty much in both areas. So doing very nicely. Now, one thing I've noticed, I think one of the reasons these points are lower here is that people aren't investing enough in the operational cost reductions. So if you look under industry, and everybody can see the same information here, you can check out all your competitors and see how much money have they invested in operational cost reductions, because you could see here that companies are all different levels, and the companies that are winning are the companies that invested more heavily in the operational cost reductions. This is round four. You should at least have at least 4 or 5 levels purchased in every area. If you're behind that, you're not going to be able to keep up with profitability, and you're not going to be able to keep earning points. Ideally, the teams I see do the best have purchased all 10 levels of operational investments by the end of the simulation. And remember, you earn extra overview points the more of these cost reductions you buy on the production page. So I see a lot of companies falling behind. Some companies not even breaking the $2,000 mark, and some companies who are doing rather well having much higher operational cost reduction. So that's the biggest problem I see in the simulation. So the profit margins here, we have a big range. Now the companies down here, we started at 40%. So if you're only around 50%, by round four, you're not doing very well. By round four, you should be in the high 50s or low 60s, as the top teams up here are. So you want to get these profit margins up, and the only way to do that is to increase prices and reduce costs. The best way to reduce costs without reducing customer expectations is to make those operational cost investments. Now, some students had questions on their total asset turnover, and they didn't perform. See some companies down here didn't perform well in total asset turnover. That happens sometimes in the early rounds when you're buying a lot of assets, a lot of factories, more operational investments. Your total asset turnover can be one of the areas that may suffer. But that's okay, because you're getting points in a lot of other areas that are benefiting from your heavy asset investment. As the last rounds occur, 5 and 6, you should see a significant payback of your assets. And pay attention to your capacity utilization. The higher your capacity utilization, the better your total asset turnover will be. But again, it's in round 3 and 4, it's difficult to have a very high score total asset turnover if you're investing heavily in new production and new operational investments. And that's why these scores have been lagging behind a little bit. And it's just, you can't win in every overview ratio every round. So this is we're sort of sacrificing our total asset turnover because we're accumulating a lot of assets quickly. So I wouldn't worry too much about losing some points in this. Generally, teams that are doing very well have a low total asset turnover in round 4. So I wouldn't be too upset by that. But you could see here that sales revenue, can grow pretty rapidly. So if you're the average return in the market, I think, is like 30%. So if you're under 30%, you're under forecasting. So you really pay more close attention to your forecasting. Look at your competitors, see how many they're selling. And as I say, a very important chart to look at for forecasting. Under your team performance chart, your individual team charts, look for market versus potential, and check out the chart that shows the blue bar is what you could have sold, and yellow is what you did sell. So here you can see that there is 600 cars you could have sold. Here you sold 4,000, you could have sold almost 4,500. So when you're doing your forecasting models, look at your potential, not your actual sales when gauging your forecast. Okay, so that's my quick 5-minute wrap up of the simulation round 4 and what you could think about to try to do to improve your scores moving forward. Okay, take care.